so we can get started. So thank you once again for joining us. This is another Mathematic program, and I have to give a huge shout out to Dave Shepard and Florence Strawberry at MedWorld Advisors for helping pull this together. We have a rock star group of people ready to give you their information and their feedback today, so I'm putting them on the spot with that. But I am going to go ahead and turn things over to Dave and say, Dave, thank you. This is fantastic, and take it away.
Thank you, Rachel. It's a pleasure to be with you and with the Mathematic audience today, and with the three distinguished guests that we have who's joined us. First of all, we have Tom Gales from Draeger Medical in Germany. We have Eric Knudsen from Zoll Medical here in the Boston area, and also Charlie Atlin from Boston Scientific, obviously in the Boston area as well. The subject today is MedTech M&A. As everybody that is probably on this conference call understands, M&A in MedTech has been very hot in 2021. It's always a very interesting topic. In 2021, it has become even a hotter topic because it seems like every day we're reading about a new deal, a new engagement. So we've got these panelists that we can talk about it. So let's go ahead and get into it. We'll start with a brief introduction of the company and kind of overview, just refresher of who they are in 2021 and what their elevator pitch, and then we'll get into the M&A discussion. Tom Gales and Draeger, would you mind just giving the high level on Draeger Medical in 2021, and we'll take it from there. Sure,
gladly. Thank you. So Draeger, last year we had quite a good year. We're doing approximately 3.5 billion euros revenue. 2/3 of that is in the medical area, and they're primarily in acute care in the hospital. And we also do 1/3 of our revenue in safety, and there we're a bit broader. We do oil and gas. On the medical side, primarily medtech, so things like ventilators, which were quite useful last year, anesthesia devices, workplace infrastructure, so operating theater, building, that kind of thing. And yeah, that's Draeger. Yeah, thank you, Tom. It's a very intriguing company. I've noticed some recent deals that you've done, so we'll come back to that. Charlie, would you mind going next?
Sure. Thank you, Dave, and thank you for inviting me, and Rachel and everybody at Mathematic for inviting me to be one of the speakers here. So much appreciated, and always a pleasure to be part of this type of event, because I tend to learn as much as anybody else as a panelist. So Boston Scientific is a Marlborough-based. So Marlborough is a town about 25 miles west of Boston. Marlborough-based, publicly traded medical device company, approximately $11 billion in annual sales across 6 business units. The business units being interventional cardiology, peripheral vascular, rhythm management, endoscopy, urology, and neurostimulation. So I won't go through in detail each of the businesses, but I would say that those have been all businesses where we have invested through M&A as well as internal R&D over the last few years. And we're very proud to be a company that is growing well on the top line over the last few years, a bit faster than our peers. So that is important. And part of the reason for that has been the fact that we have invested in our pipeline a lot through M&A. I'd say probably more so than our peers. We've invested our cash flow in M&A activity rather than paying dividends or buying back shares or paying down debt. So we're relatively aggressive from that perspective. And my job is SVP of Corporate Strategy, Business Development, and Venture Capital. So I'll leave it at that. But again, thank you for this invite, and I look forward to the discussion today.
Thank you, Charlie. When you look at portfolio management over the last 10, 15 years, a lot of companies have done a pretty good job of it. But I look at Boston Scientific, if you look at the track record of which you've invested in and also divested, it's pretty stellar. And so it's something we could talk about in more detail at a later time. Eric Knudsen, last but not least, heading M&A over in strategy. I'll let you say your exact title over at Zoll Medical. Look forward to your introduction.
And thanks, Dave, and I echo the thanks that Charlie expressed to MassMedic and to MedWorld. I appreciate being invited and being called a rock star. That never happens, so ego's a little higher today. So I'm Eric Knudsen. I'm the Vice President of Corporate Development at Zoll Medical. Zoll traditionally have been known as an innovator in external defibrillation. You likely know our products if you walk through Logan Airport or many businesses, stadiums, you'll see our AEDs. That's a very small part of our business, but probably the most visible. We're certainly the worldwide leader in overall defibrillation, whether it's on the wall of a public access type building, or inside an ambulance, or inside a hospital. But that business makes up roughly less than half of our revenue today. We've expanded, and we define our business and our strategy by disease state. So we really grew up and we're known best for sudden cardiac arrest and innovative treatments around that disease. But we're also heavily involved in prevention and treatment of heart failure. We've made a number of acquisitions in that and strategic investments in that area, and that makes up actually our interaction with heart failure specialists and interventional or in specialty cardiologists is a big part of our business. The other two disease states that we're focusing on, which have been relatively new for us and really come through M&A, have been treatment of acute myocardial infarction, and that's often in the cath lab, but we see it broader than that. And then respiratory failure. As Tom mentioned, this has been a very good year for those. Well, maybe that's a little bad taste. It's never a good year in terms of pandemics, but helping to treat those that have been afflicted by the pandemic with some of our solutions, we've been able to really meet that demand with our ventilation products, as Drager does as well. And that's also an area of focus for us. So I'll stop there, but looking forward to the discussion.
So Eric, thank you. And again, thank you to all three of you for joining us. So as we get into the M&A discussion, something that's often asked of me in terms of M&A is M&A opportunistic? Is it tactical? Is it strategic? And Eric, being an interesting company, Zoll, that's owned by a Japanese larger entity. So when you think of M&A over at Zoll Medical, is it something that drives strategy, or is it something that you execute as part of your strategy, or a little bit of both?
Yeah, so I think our goal is to be strategic and to be proactive and not reactive. But you can't always control what's on the market and what's for sale, and so you have to be flexible as well. So as I mentioned, for Zoll, we have really worked hard to define what we're not interested in, and in the areas that we don't really want to play in, just because there's scarcity, right? There's scarcity in resources, both from a cash flow perspective and just from an opportunity perspective. And so we've tried to be very disciplined in our strategy to concentrate on the disease states that we've identified, and then pursue solutions around those disease states. But oftentimes, we will, I'm sure that my three colleagues here will, you're always getting pitched new strategies by various folks within the industry, right? In terms of what might work, and I think you have to have an open mind to that as well. So there is some reaction as well.
Well, I can validate that all three of you have said no to me at one time or another. So I can compliment each of you on your disciplines that you have. But Eric, you make a good point. That sometimes what you say no to is as important as what you say yes to. So Charlie, would you mind to expand on this topic for Boston Scientific?
Yes, sure. And I agree with Eric that it's a blend of strategy and opportunism. We say no to most. I often tell folks most of my job and most of what I work on is stuff that never becomes public, and stuff that I probably ethically can never talk about. So it's actually quite frustrating because if ever I'm out looking for a new job, I could never really tell anybody what I'm actually working on. So, so to your point, what you say no to and the choices you make, strategy is a lot about choices. And when you do a deal, you are choosing not to do, in our case, usually 2 or 3 other deals. We recently made 2 relatively sizable acquisitions in the $1 billion range. And a lot of the debate was not whether those 2 deals were good. We know they're good. It was whether the other 20 that are also good are going to be okay to pass up, because you can't do everything at once. And that's particularly true for smaller companies. And it's particularly true for even larger companies like ours, where there's imposed a discipline by the fact that you have a capital structure and a debt rating that doesn't enable you to just do everything you want to do. So absolutely, it's more about where you say no than where it's easy to say yes. It's much harder to say no.
Yeah, it makes sense. Tom, over at Draeger, combination of strategy and opportunism, how do you look at it?
Absolutely right. And that was a very nice way of putting it, Charlie. I mean, the opportunities are endless. There are so many companies out there. And at the end of the day, we do have limited resources, unfortunately. But it is definitely exciting. I mean, what I find, especially when small and new companies come, that you do get different opportunities that you might not even have thought of before. So definitely, being willing to look at and consider new things is definitely important. But you're absolutely right. Unfortunately, we can't do everything. But no, I'm being a family-owned, so I'm based in sunny Germany at the moment. So hello from Europe. We also try and be fairly set on what we're
Tom, sorry. I think you cut out.
Lost. Carry on.
I think I cut out for a second there. So I'll go ahead and move on. As far as one of the next questions that people often, a lot of things I'm sharing and asking you guys are questions that people ask me, as far as these big companies. And sometimes I kind of have an idea because I've been to the Fortune 500 companies and seen how we behave when you're in those roles. And sometimes it's just speculation, because unless you're really on the inside at a given time, you don't really know. But so Eric, at your company, if somebody brings you an idea and it's interesting to you, who gets involved in it? Is it Eric Knudsen saying yes or no, or is there a team of people? I mean, how does that work?
Yeah. I'm like the man behind the curtain here. Like, perception and reality are 2 different things. So I view my job as very much a coordinator or consensus builder, right? So there are a number of people that stakeholders that feed into the decision making of whether or not we pursue a particular opportunity. I am generally not a gatekeeper, although the strategy in a way acts as a policy for us, right? And so if someone were to come to us with an orthopedic opportunity, I might be in a position to refer you to a colleague in another company, but it wouldn't be the right product for us. So in that way, I can be a gatekeeper because I know what we're not interested in. But generally speaking, I'll get a number of ideas, and if they resonate with our strategy, at the very least, I'll run it through either a formal or informal committee to understand whether or not it's the right fit for us, and whether or not that's something we'd like to get through our funnel.
That makes a lot of sense. And Charlie, one of the things that I've noticed that some of the companies of your size, the Boston Scientifics, the Medtronics, and some like this, and that giant level that you participate in, is that things come to your way, and then you have business unit leaders, and you have business unit M&A people as well. So can you describe how all that works and the interaction between the corporate M&A role and the business unit interaction?
Sure. In our case, it's extremely simple. And a big part of my job is to try to coordinate things in as simple and efficient way as possible. Similar to Eric. We have, like I mentioned earlier, 6 divisions. Each of our division has 2 business development folks who actually report to quote corporate. They report to me from a formal standpoint, but they're housed in the divisions, and they dotted line, and I want to say informally, report to the division president. But the reality is when an opportunity comes in, there's a division president involved, there's a divisional BD leader, and then there's myself and usually the CFO and CEO of the company. And if it's very early stage, our CFO and CEO of the company are not involved early, but early we'll sort of, it'll be more the division looking at whether the opportunity makes sense. And if they're interested, then I get involved and I'll help with sort of sanity check and making sure that timing, valuation, and tactics all make sense. And then a big part of my job is to coordinate and say, okay, Dave Shepard, you're the president of endoscopy, and Tom works for you in biz dev endoscopy. We just get a banker call for a cool company. You guys think it's really interesting. So then we work together, the 3 of us, and we figure out whether it makes sense. And then the CEO and the CFO are always willing to meet to discuss. And we have monthly meetings and then a bunch of ad hocs. And then my job will be to say, okay, Dave, Tom, this makes sense. We should do it at our next monthly meeting in 2 weeks, or we should do it ad hoc tomorrow morning because it's really urgent. And then my job is to sort of be efficient and only bug the CEO if I really need to on an ad hoc basis, or otherwise try to organize things in our scheduling. But we're pretty efficient. I'd say part of our secret sauce, or what I think we do well at Boston, particularly for a large company, is we can respond very quickly. And a big part of my job is to make sure that that I do it when it's absolutely needed. And our CEO is great because our CEO is super responsive. So we use email a lot, and our CEO always responds quickly. And if it's like, hey, dear CEO, we need your thoughts on this ASAP. Do you think you could meet up? Usually our CEO will be like, within very quickly, he'll respond and he'll make himself available and he'll carve out time early morning, late night. So that helps. That's part of our culture at BSC. And I'll close with this comment. Part of our corporate culture is very much a culture of doing deals, understanding how unpredictable it is, and therefore being flexible and sometimes being patient, but then knowing how to act quick. So I think we have that pretty much nailed down.
Yeah, that makes a lot of sense. And Tom, as I kind of going on this same theme as far as corporate M&A and then working through the business units. And when I think about some of my time back at Fortune 500 companies, it's not just about what the M&A person thinks if it fits in the strategy, like Eric talked about. It's got to fit within the strategy before he says he even wants to consider it. But once you agree it fits in the strategy, then you have to go find a business unit owner. Is that correct over at Draeger as well?
Absolutely right. And that was honestly one of the best things that Draeger ever did a couple of years ago. We switched from a functional organization to, similar to Charlie, that we now have 8 business units. And that's wonderful. So now we have very, very clear, dedicated people who can make decisions very quickly. And that's exactly, so I see myself as a bit of a spider in the web, and we're catching and funneling all of the opportunities to us. And then the good thing is that we know who the right people are in the organization that can quite quickly give feedback and evaluate it and say, technically or business, does this actually make sense to consider in more detail or not?
Yeah, that makes a lot of sense. And one of the things that I wanted to compliment all 3 of you on from where I sit, and then also I think where I sit is where we typically work with a lot of middle market companies or early stage companies, and well, everybody wants to hear a yes every time they talk to you. They call Eric or Tom or Charlie. They come on, why don't you just do this? It's also appreciative when you get a response, and even if the response is no, at least you know where you stand. And all 3 of you are very good about at least responding, and we understand the status of where it's at. And I think that's very helpful. So I just want to compliment you on that while I'm thinking about it. So Eric, when I think about deal origination and people are always asking me about, so how does a company like Zoll start on a deal? Is it because you've done your strategy, now you're going to go target a few companies, or is it because somebody like me working with somebody brings it to you, or the entrepreneur himself comes to it? It's probably a little bit combination, but overall, how does that work?
Yeah, I mean, it's certainly a combination, right? And so part of, we certainly get ideas from folks like yourself, Dave, and investment bankers, working with the professional societies and what's the latest in the clinical development, technological development, what's out there, trying to get the full spectrum of opportunity out there through a number of different sources. So I think it's really all of the above. And we are, part of my job is, one of the benefits of participating in a forum like this is to let people know that we're out there, that we are, an active acquirer. There's perceptions of my company for sure that we do a certain thing, but may not be aware of the other things that we do. And so, I think getting just the message out, and I would encourage people not to be shy to reach out to us. To your point earlier, like, I'm not afraid to say no, but I'll always, for the most part, we'll answer an email or, pick up the phone and get to the right person if it's appropriate.
Charlie, I'll bring that over to you as well. Do you like looking at your email and saying, here's a new opportunity, or you go, oh no, I got to deal with another one? How does that work for you?
No, I mean, it's part of my job. It's not always the most fun, because sometimes the opportunities are clearly off, and sometimes people who bring the opportunities I really haven't. I would think sometimes they haven't even read our annual report, or they have no idea, because I'll get like a building product sometimes, and then the person will say, well, can you explain to me why you're not interested at this time? I'm like, oh man, this is rough. So that happens a little bit, but that's part of my job. I actually don't. I probably have on average, like, this is there's probably at least one, if not several, inbound inquiries on average per day or per business day that comes my way, where I have to figure out what to do with it, whether it's an investment banker call, and sometimes, by the way, it's calls where the banker may not even realize, because they'll say, oh, here's what's going on in the market, and they'll mention a company that I'm interested in, and I'll sort of ask a few. And so that's how ideas may come. It's not necessarily, hey, this company's for sale, are you interested? It's, here's what's going on, and I hear that such and such company has a new CEO or is considering going public. And so my job is to connect dots, to get the right people involved. And there's at least one a day where I'm trying to connect dots and say, hey, division president and divisional BU person, do you think this could be interesting? I just heard this from a banker, from a VC firm. Should we investigate further? So a big part of my job is to try to connect dots, common sense, read the tea leaves, and figure out where there's an opportunity. And sometimes it's not obvious. Sometimes it is obvious. It's, hey, Charlie, this is investment banker ABC, and we're selling at this target. But most of the time, it's not that simple. Like, for example, we bought Luminous' surgical business. We announced the acquisition of it. It hasn't closed, a few months ago. But that was an instance where it wasn't out. We didn't get a call saying from the owner, barring private equity, saying, hey, we want to sell the surgical business. We sort of said, well, barring private equity just bought the whole of Luminous. They might be more interested in aesthetics. Maybe this is an opportunity for them to sell the surgical business that makes more sense with us. And so we were sort of, we drove that a bit, and that's how that deal got done. It wasn't part of a banker process, for example.
Yeah, so that was kind of a part of the strategy of looking at the opportunities that could be out there.
Exactly, and being opportunistic. It's a long story, but getting the right people involved. Our CEO got involved, because it's not easy to just say, hey, we're interested in this subsidiary of yours. Are you interested in selling? Most people are going to say, well, fishing, are you really interested? So you got to get the right people involved, and it's more art than science, because each situation is very unique. And that's also also part of my job, is to say, hey, CEO of Boston Scientific, do you mind making this call to show seriousness and this is maybe a bit unusual, but can you get involved? And those are the judgment calls where that's also a part of my job, is sort of the tactics and the timing, in addition, of course, to the valuation and the strategic fit.
Right. Yeah, I'm glad you brought that up, the art and the science part of it, because one of the things since I've been involved in the M&A world has been situational intelligence. To me, it just has become a key word that we talk about all the time, because everybody makes mistakes. So I'm not picking any one person, but sometimes you just have to think through the situation that you're in, and what's the opportunity, and what's the science around it, but what's the art around how you contact somebody and you have to engage in the discussion, and really how you do that, because I think situational intelligence can make a difference, being successful, or it can also be a missed opportunity if you don't handle it in the right way. So I'm glad you mentioned that. Hey, so Tom, when you think about people always want to know, like what's the driver of M&A at your companies? We talk about strategy and tactics, but is innovation the biggest thing that you look for? Is it market share? Is it entry into adjacent spaces, new markets? Any thoughts there?
So we in principle have all three. So technology is definitely a key one. So Draeger does develop quite a lot. We invest a fair amount in our own development. So they're innovative technology, sensors, that kind of thing, we're certainly very interested in. Portfolio expansion, so products that would either fit, if we've got a gap in our portfolio, or left and right as an adjacent, would be extremely interesting. And also market access. So we're already present in 55 countries, but we're not we're not accessing all customers in every country. So, and that's particularly more on the safety side, maybe, but there we're also interested in different partners and trying to get access to the right places. So typically the technology tends to be smaller companies, and that's always very interesting, especially getting involved with companies at an earlier stage, maybe even pre-revenue or pre-approval. Because that's one of the big things where we really can help with our engineers and lots of certification experts.
Yeah, that was actually one of the reasons why I think the three of you are excellent panelists for the Mass Medic audience, because there's a wide range of members in the Mass Medic audience, from large companies to middle market, but there are a lot of early stage people, and they're always wanting to know these questions. Do you actually talk to people like me if I'm an early stage entrepreneur? And all three of you are pretty good about it. You're pretty good about understanding what's going to fit and what's not, and what's worth the conversation, and you come back to it. So as expected, time is going very fast. So there's a couple of things that I wanted to make sure I ask you before I get over to the audience questions. And then the first is just on a personal level. And Eric, I'll just start with you. What led you to get in your career path to get into M&A? When I first met you, you were over there, trying to get market share in Europe for another company, and enjoying the lifestyle in the Netherlands, and good milk and good beer. So what led you into the M&A path?
Yeah, it's funny, Dave. Thanks. Well, and you're leaving out. I was my company was acquired by Covidien, and Dave was a vice president there. And with most M&A, there's redundancies, and my position was one of those. So I was fortunate enough to go work for Dave for a few years. And Dave, just to credit you, you were really supportive, and allowed me to one, pursue my MBA while I was working for you, and two, go pursue other opportunities within the company. So I was able to transition from Dave's group over to the corporate development group, or business development group at Covidien, and work there for a number of years. It's a great career. It's a great role. You get to see all different stages and all different parts of companies. And, I joke with my boss, my goals are roughly the same every year, but every year is different, right? Because you're running across different opportunities and different personalities and different companies. And you get to learn a lot. And every day I learn something different about, either a different part of the business or a different business entirely.
Yeah, and from my perspective, you've done an excellent job as I've watched you grow these paths down the way. You're doing things at Zoll that I never expected Zoll to do. So congratulations to you on
Hopefully that's a good
on that.
thing.
So Charlie, same question. I've only known you since we've connected when you've been at Boston Scientific and I've been at MedWorld. But I looked in your background. You were an investment banker, and But I don't know before that what made you to get into investment banking to begin with, and then what led you from that path to the corporate path.
Yeah. In short, banking was my first job out of college. I came to college in the U.S. I grew up in Europe, but came to college in the U.S. First job was banking. I always liked math and science and economics. So a good blend of all that was finance, and that was my favorite. I mean, it was a liberal arts college, so there was only one finance class I ever took, but that was my favorite class. I remember it very well, and I really liked it. So that's why I applied to investment banks in my summer of my junior year. This was 1992, and then I really liked banking, and then I went into investment banking in '93 and stayed in banking till 2009, and then it was more opportunistic. I mean, I basically got laid off in 09, whenever the financial crisis was. And I thought, all right, well, I'm going to call a few clients. And then I called the CEO and CFO of Boston Scientific at the time, who I had done a bunch of work with. And they had been trying to hire me historically. So I was like, hey, great, I'm available. It was not quite that simple. The transition time was longer. I'm making it sound like I was more wanted than I was, but I ended up at Boston Scientific, and I've loved it because in a company, doing M&A and strategy inside a company, and every company is different, and part of our jobs in BD and strategy are much less easy to explain because they really vary by company. It's not like head of accounting or head of tax, etc. Ours is much broader. It depends on the team of people you're with. It depends on the space you're in. But at Boston, it's been extremely active. And the culture at Boston Scientific is very M&A focused, and therefore the job is extremely lively. There's always something going on. You're always learning new stuff. You're always in situations that have excitement. So you're just never bored. And I've done more deals at Boston Scientific and have learned more about M&A at Boston Scientific in the last 10 years than I ever could have if I had worked in an investment bank for 10 years, because you're just doing so much more and you're never wasting time. You're never pitching business with clients. And so it's almost a lot of the positives of investment banking without a lot of the negatives.
Right.
I love it.
Well, that's great, and it shows, because usually when you love something, you're good at it, and similar to how I've seen Eric do well over at Zoll. If somebody did a case study in Boston Scientific, I'm sure people actually have, since you've been there working with your CEO, as far as the discipline around inorganic growth has been very impressive from the outside. So I just want to compliment you on that.
Yeah, no, thanks. Yeah, and that's from our board of directors down to our administrative assistants. The culture of business development is very strong. Confidentiality, process, professionalism, and discipline, and understanding of the importance of M&A. So I'm very fortunate because everyone around me at Boston gets it and is on board.
That's great. So Tom, Gail's same question. Yeah, I think I know more on the personal side. Yeah, I know what brought you from being an Englishman to being a German, on a personal side, and a very, very important decision, probably one of the most important decisions you made. But I'm not sure I understand. I don't know the history of how you got into M&A.
I worked at a small consultancy in Canada, actually, and there was exposed to M&A, and then joined an industrial services company in northern Germany. And that was a great 6 years. We bought 25 companies, and that was the jump in. And For me, the fun thing about M&A is basically, for those that don't know exactly what they want to do, here you do everything. So it's from strategy, product management, HR, psychology, law, finance. It has a very, very, very many, it's very diverse, and the entire process from, valuing the company to the negotiations to trying to do the integration afterwards. There's lots and lots of different elements. And particularly, Eric said it earlier, so every single deal is different. And that's what makes it a lot of fun, is working with the different people. And especially then bringing together people from our side and trying to structure things. So it's a very, very fun, very, very diverse job. I have to say, I really enjoy it.
Yeah, and one of the things that I've really been admiring from afar, as far as what you've done over there, Tom, is you found a way to look at things in M&A styles, especially with early stage companies. It's always a difficult thing to figure out how to integrate them into an M&A process, and how do you de-risk it and that sort of thing. And it seems like you've established kind of a rhythm over there at Draeger, and how you handle that. So my kudos to you for making that happen.
Thank you. Well, I mean, that's one of the conflicts with a corporate M&A, especially getting involved early. Typically, I mean, you would think that maybe there's a difference in kind of aim. There's typically small companies, they're looking for financing, and they've got the big aim to get rich and have a big exit in several years. Whereas we as a corporate, especially if the intention is at some point to take it over, then that's not always an easy balance. And the way we try and balance it is by being extremely helpful. So when we do invest in companies, and we've recently just actually done a structured deal with a Swiss company, they were initially looking for just financing, and we turned it into a structured deal so that we can immediately from the beginnings, it's a pre-revenue, they're still trying to get certification. And it's a great chance that we can then bring in all of the power of a larger, slightly slower, more rigid corporate, but we've got lots of very good people. So if we can bring these good people and still try and keep the agility, and the structured deal is a nice way that we're not buying 100% and then that's it, but there is still a strong motivation in the company to be successful. So it's
yeah, I'm glad you mentioned structured deal, because that was one of what often comes up around valuation and how you address valuation gaps and then that sort of thing. So just a quick question, Eric, Charlie, and Tom, how many of your deals are just straight out all cash deals or all stock deals versus structured deals? Eric, percentage wise?
Percentage wise, there's some form of contingent consideration in probably 80% of our deals. Yeah, that's, if you want a quick answer, that's that.
Yeah. Okay. Yeah. Charlie?
We're about 2/3, 1/3. I just did this for our board of directors the other day. So about 2/3, 1/3 based on the 40 M&A acquisitions we've done since I've been at Boston in the last 11 years.
Yeah. Okay. And Tom?
Sorry, 2/3 is structured. 2/3 structured. 1/3 all cash up front. Sorry.
Yeah. Okay. Yeah.
We've done a single 100% acquisition in the last 7 years. The rest have all been structured.
Okay, so that really, doing a structured deal then really is kind of the state of the art really in M&A today. Would that be a correct thing to say?
Well, I think it depends, Dave, how you define structured, right? So I think if it's an upfront payment and then milestones or some sort of revenue-based contingency, that's been around for a while. What at least Zoll has been, and I think Tom just described it as well, is investing in a company for a certain amount of time, and then either formally with an option or informally with intent to eventually acquire that company, move from a shareholder to an owner perspective situation. That I feel like I see more of that, and we've certainly been doing more of that over the last 3 to 4 years.
Yeah, thanks for that explanation. So one of the questions that comes up, and I'm looking at the chat box from the audience, is often about early stage deals. So I think we've already covered that early stage companies can can attract your interest for all three of you. I think we've tackled that pretty well. Kind of needs to fit within your strategy. You have different ways of being able to tackle it, whether it's an investment or some kind of a structured deal or that sort of thing. But Charlie, when you get something that's an early stage deal, what gets you excited more about one early stage deal over another? What gets you out of bed in the morning to talk to somebody about their opportunity?
Well, if it's strategic and the technology is differentiated and it has great potential according to our team, usually it requires buy-in from a few people on our team, including clinical, regulatory, and marketing, and then business development. The earlier you are, the higher the bar is, because our ideal acquisition candidate, which by the way does not exist, is a technology that's approved, so de-risked clinically and regulatory wise, not overly expensive, and in a heavy near-term revenue ramp mode that can add immediate revenue growth and profits. So what I've just described does not, I acknowledge it does not exist. You cannot get that. So, but you nonetheless, you start with what's the ideal perfect target, and then you sort of, and then it's the trade-off. So if you go very early stage, you're going to get a lower price usually, but you're going to have to deal with dilution in the near term. What we've done in the last 8 or so years is built up a venture capital portfolio. And we've done actually more VC deals than M&A deals in the last 10 years. And that's sort of how we'll bridge the gap. If we see something really early stage that's interesting, we might make a VC investment, take a stake, maybe have some strategic rights, maybe not. And that's a way to minimize the burn and the risk for us, but at the same time to be in a good position to acquire the company when it gets at the later stage and the sort of ideal stage that I just described earlier.
No, I think that's helpful. Somebody from the audience just asked, is crowdfunding round in the company's history a red flag or an obstacle when you're considering acquiring the company? Tom, I'll start with you on that too.
Honestly, that's not something that I've come up so far. So we've had companies with lots of minorities in there, and for us, it's important that we know who we're talking to. So as long as there's a clear board of directors and clear management, how they financed it in the past wouldn't be so much an issue. But I would certainly want to tidy up the shareholding if we do invest moving forward.
You need clarity on the decision making and in the cap table who's going to be driving that, and are you going to have any minorities are going to be a challenge for you, right? What about Boston Scientific, Charlie? Is crowdfunding an issue either way?
No, I haven't really seen too many target companies or investees that had funded through crowdfunding or so I must confess it's not an issue that has come up. And if crowdfunding works for an early stage company, by all means they should do it if they can get capital at a good price. More power to them. I'm personally less familiar with that form of funding and the pros and cons. I can imagine the pros and cons.
Right.
But probably some companies are good fits for crowdfunding and others are not. But for us as a potential acquirer, if a company has crowdfunded, we're not going to say, oh, that's a thumb up or a thumb down. We're fairly neutral. Same thing with it, just shareholder base in particular. We won't attribute too much importance to whether a particular shareholder, to what the shareholder looks like. We are very equal opportunity.
So Eric, before I have you answer that question, I want the three of you to think about my next question. And my next question after Eric responds to each of you is there anything that you would like to share about M&A that I haven't asked you yet? So Eric, first of all, the crowdfunding question, then I'll come to you last on the next question to give you time to think.
All right. So on the crowd, I would echo what both Tom and Charlie said. I look at it as more of a friend. It's analogous to the friends and family around normally, right? So it's, dispersed early stage shareholder base, and normally by the time you're talking to companies of our size, oftentimes you have more, well-known investors, in the forms of VCs and other things like that. So it's never really been an issue, and I don't imagine it would be.
Okay, great. So Charlie, is there something about M&A, because we are getting down to 12 minutes left, that I haven't asked you about that you think might be interesting for you to share, whether it's Boston Scientific specific or just in general? Is there anything you'd like to maybe just share with the audience while I got you here to talk with you?
So that's a good question. I would say there's a lot. I would say timing. Yeah, my thoughts would be more whether you're a seller or a buyer. What's really tough with M&A, and no amount of experience can really prepare you for this, but you should be aware that timing is super important, and seizing the day is important. Whether you're a seller or you're a buyer, there's real value in knowing what you want and being able to act quickly and not looking back and not regretting and not wavering. And that is much easier said than done. Everybody will nod and say, yeah, I get it. I know what I want, and I know how to seize the day. But really, very few people really know how to do it, to have that conviction, because on the sell side, I have seen so many, and these are not things you end up talking about that are in the papers, because these are deals that by definition die, but sellers might get greedy and say, oh, my banker says my IPO valuation is $500 million plus, so your offer at 300 million, really, I don't know if I should do it. I think, watch out. Like, if you want an exit, if your paid-in capital is 20 million and your investors are going to be happy making 20 times their money, take your money, sell the company. Or if you really are convinced and you really want to take the risk and you want to not make 20 times but 200 times, then know that too, and don't waste your time on M&A, because you'll regret. So to me, the importance of timing and knowing what you want is super important. And I've seen so many deals, because of buyers or sellers wavering, sort of blow up for the wrong reasons.
Yeah, no, I'm really glad that you said that. That we kind of have one of our advisors has a saying that pigs get fed and hogs get slaughtered, which is kind of to what you're talking about. The other thing we've seen, the number one killer is deal fatigue. And sometimes on the buyer side, seller side, if all of a sudden one side is just dragging things on too much, then deals will, the same deal 3 months ago everybody was excited about, all of a sudden somebody's not. So you get the deal momentum, you just got to take it in and finish it. I think that's your key point there. Yeah.
Things can change quickly on both sides. Just because it's a big company, Boston Scientific, big companies are just as, they can be just as fickle. The people might change, they might change their opinion. So when you got it, when the stars are aligned, boom, seize the day. Don't boink around, because you might live to regret that.
I've seen it actually. So thanks for that. So Tom, same question to you.
I thought that was an excellent answer from Charlie, and I'm smiling, Dave, because you and I were in discussions for a deal that ended up dragging on and not happening a couple of years ago. So
correct.
I can absolutely confirm, Charlie. For me, one of the things that we really look for is, and that's kind of ties to this structured deal and not wanting to do 100% deals, the people are absolutely key in the companies typically. And that's why the last thing that we want is that the exit is then the end. I mean, there are terrible statistics, especially of small companies being taken over and then the management all leaving. So for me, it would be, especially for companies that are looking to sell, is choose a partner that, yes, pays well, but also one that you want to work with. That's certainly something that we try and do, is make the integration fun and successful, so that actually then, ideally the synergies you will then participate from if we structured it well, but also that we do it in such a way that, that you want to stay on, and that so an exit or a sale to a corporate doesn't mean, okay, good, I'm retiring now. Ideally, it'll mean, you know, the start of something fun together.
Yeah, that's a really an excellent point, especially since we now are talking, according to each of your statistics, the majority of your deals are some kind of structure, which means that you're going to be married together for a little while. So you should structure it in such a way that you're going to enjoy the marriage. That's what you're saying, right? So
Exactly.
So Eric, same question.
Yeah, so I mean, echoing some of the things that were said, I think the importance of relationships, in M&A, I think can't really be understated, and I'll just give a couple examples. We just acquired a company called Respicardia. It's an implantable nerve stimulator for sleep apnea. We had engaged with the company over 3 years ago. We had financed the company through debt, and we had got to know the company, and our CEO John Rennert was on the board. And so we built a good relationship with that company over a 3-year period before we were, in a position to acquire them, and it made the deal so much easier. And it de-risked everything being the same. All the financials, all of the metrics would have been a different risk profile had we not built that relationship over 3 years. So it was much more qualitative information that we were able to get that reduced the risk to give us confidence to do the deal within that 3-year period. And even more, that's a story of everyone getting along, and it was symbiotic for both parties. We bought a company called Cardiac Science a few years ago. Before that deal, 2 years prior to that deal, we were in a bankruptcy proceeding trying to buy the company out of bankruptcy, and we lost out to a private equity firm. And it was contentious, and we felt that it wasn't the right decision from the bankruptcy court, but that's the way that the ball went for us. But I kept a relationship with the private equity firm that bought that company. And then a few years later, when they were ready to sell, we were in a position to have a frank and open discussion about, would Zoll be the right owner for that, for this asset? And it turns out we were. And so, keeping that relationship, even though went through a very adversarial process, taking a deep breath and keeping the relationship was really important. And that turned out to be a good acquisition for us.
Yeah, so relationships, timing, deal structure, the very important learnings. Rachel, I just got one last question for everybody, if I can fit it in. So if I had a company, I think there's a lot of people that are asking this, and I'm seeing this from the chats out there. If I had a company that I thought would be a good fit for your company, and I was interested in selling to your company, what's the best way for me to approach your company to address interest levels? Tom, I'll start with you.
Send me an email.
Okay. All right. And are you comfortable with us putting out the contact later on, or?
Yep. Very, very happy to share.
Okay. Eric?
Yep. Same.
Okay. And Charlie?
Same.
Okay, great. So I think in summary, I think what we learned today, and we could spend all day talking about this, as we talked about with Rachel early on, because you guys have such knowledge from all the experience you have, is that we've really learned that it really doesn't matter the size of the deal. It's really around how it fits into your strategy. And it can be really a great strategic fit, or it can be a little opportunistic relative to that. We do understand that timing really makes a difference, and how you run it with the momentum with the deal. We understand that deal structure is going to matter, and the relationships are really important. The thing we didn't get into today was valuation. We don't have time to get into it, but I'll just make a comment. People are always asking me about valuation. I'm sure you're asked all the time. The comment that I have on valuation is that people always say, what's the typical valuation? I don't know if you guys can confirm with me or not, but there is no typical valuation, because every deal is unique. But Charlie, would you agree with that?
Absolutely. Especially in today's market, it's all over the place. So which means buyers and sellers have to know what they want, be disciplined, and not let the hype get to them. So even more important today to have advisors like yourself, Dave, and teams that can be level-headed and not get caught up in the hype.
Right. Yeah, that makes sense. That has to be common sense on both sides. And like I said earlier, you just make the deal and make it happen when it makes sense. Rachel, I know that we're coming up against 2 minutes. Do you want to take it from here?
We are. I just want to say thank you to Dave, Eric, Charlie, and Tom. I think a lot of what you said is going to resonate with us and our audience. You know, I think some of the things we often coach our Massmatic Ignite Accelerator startups are exactly what you just said, right? Situational awareness, know who you're reaching out to and why. And a lot of what you just said reminds me of how we invite them to deal with FDA. Don't go to FDA and ask them what your pathway is and what you should do. Tell them what you think it is and why, right? If they come armed with information for you all as to why they think it's a good fit, having done the research and why they think they're worth a certain amount, it gives you guys at least something to start on and start to have those conversations. So thank you all so much for joining us for this. This was really fun.
Thank you, Rachel, for the opportunity. Thank you, Charlie. Thank you, Eric. Thank you, Tom. I really appreciate your time.
Thank you.
Have a great
Thank
rest
you
of
very
your
much.
day, everyone. Thanks.
Bye.
Thanks very much.